Have you ever looked at the price of something you bought from overseas and just wondered where that number really comes from? You know, it feels like there's some kind of secret formula behind the final cost. Well, guess what? Today, we're cracking that code. We are going to completely demystify the world of import taxes. And I promise, by the end of this, you'll know exactly how that final bill gets calculated. Let's dive in. Seriously, just think about it for a second. When you buy a product that's traveled halfway across the world to get to you, what's in that price tag? It's definitely not just the item itself and the shipping fee. Oh no, there is a whole other hidden layer of taxes and duties that get piled on before it ever lands on your doorstep. So to make this all make sense, we're going to approach it like a recipe. It's actually a great way to think about it. We're going to start with a base ingredient. We'll add a few spices in a very specific order, and by the time we're done, you'll have the exact formula. It's all about knowing the ingredients and just following the steps. Okay, so here's our game plan. First, we're going to lay the foundation with something called the accessible value. Then we'll get into why timing is just so critical. After that, we'll introduce the three main taxes you'll see. Then we'll put it all together in a big, full calculation. And finally, we'll cover a couple of really key rules you just have to know. All right, first up, probably the single most important concept we're going to talk about today, the accessible value. You have to think of this as the bedrock. It is the base number that every single tax, every single duty is built upon. If you get this number wrong, trust me, everything that follows will be wrong too. So what is this base ingredient of ours? Well, the accessible value is basically the total value of your goods when they show up at the border. And that includes things you might forget, like the cost of shipping and insurance. It's the true all-in cost of getting that product to the country before any government taxes get slapped on top. Now, you're going to hear this term a lot, SOB. It stands for free on board, and it is a really crucial part of our recipe. The FOB value is, simply put, the price of the goods themselves. That's it. It's the cost before you add on all the international shipping and the insurance. It's the real starting point for figuring out our accessible value. Next up, let's talk about timing. Because, and this might surprise you, in the world of customs, the date your shipment physically shows up, that's not actually the most important date. Nope. The day you file your paperwork, that's the date that truly matters. You see, there are two key dates you need to know about. First is the date of entry inwards. That's when the ship or plane gets the green light to enter the port. But the one we really care about for our calculation is the date of bill of entry. This is the day you, the importer, formally tell customs, hey, here's my stuff. So, why is this one date so darn important? Let's take a look. Wow. Okay, this slide just says it all, doesn't it? Look at this example. The duty rate was 20% when the ship arrived, but just 4 days later, when the paperwork was filed, it had dropped to 10%. And guess what? Customs uses that lower 10% rate. The same thing happened with the exchange rate. They got to use the more favorable 85 rupees to the dollar. That small timing difference can save an importer a ton of money. And hey, speaking of exchange rates, here's another super important rule. You can't just go online and use whatever rate you find. For customs, you absolutely have to use the official rate that's published by the CBIC. That's the Central Board of Indirect Taxes and Customs. The rate from the Reserve Bank of India, the RBI, doesn't count here. It's got to be the CBIC rate, period. Okay, so we've got our base ingredient, the accessible value, and we know exactly which dates rates to use. Now it's time to add the flavor, the spices. There are three key taxes that get layered on top, and believe me, the order matters. Our first spice is called Basic Customs Duty, or just BCD. This is the main event, the primary tax. It's calculated as a simple, straightforward percentage of our accessible value. Pretty easy, right? Next, we add something called the Social Welfare Surcharge, or SWS. Now listen up, because this is the crucial part. This is a tax on the tax. I'll say that again. It's not calculated on the value of your goods. It's calculated on the amount of BCD you just figured out, and it's usually 10% of that BCD. And our final main spice is the integrated tax, or IGST. This is part of the whole GST system, and just like with our other ingredients, the order is absolutely critical. IGST is calculated on a subtotal that includes our original accessible value, plus the BCD, plus the SWS. It's a tax on the entire accumulated value up to this point. Okay, let's see our recipe in action with a quick example. We start with an accessible value of 200,000.
Step 1, we add 10% BCD, that's 20,000. Step 2, we add 10% SWS, but remember that's 10% times the BCD, so that gives us 2,000. Now we have our subtotal for the final tax. So step 3, we calculate 18% IGST on that new subtotal. Add up all three of those taxes, the BCD, the SWS, and the IGST, and you get a total duty of 61,960 rupees. See, it's just steps.
All right, we know the ingredients, we know the basic method. Now let's cook a full meal. We are going to walk through a complete, more real-world example to see how all these pieces fit together perfectly. We're going to follow a really clear 6-step process. You can think of it in 2 parts. The first 3 steps, that's all about getting our foundation right, calculating that final, all-important assessable value. Then, the last 3 steps are about layering on our 3 key taxes in exactly the right order to get to that final number. Okay, let's do this. We start with the price of the machine. Then we add in other costs like design charges and a local agent's commission. Boom, that gives us our FOB value of 866,000 rupees. Next, we add the air freight and insurance. Now, there are some really specific rules for these two, which we'll get to in just a minute, but you can see how they get added to the FOB. This brings us to our final base for tax, the assessable value of 1,048,943 rupees. Now for the fun part, layering on the taxes. We take our assessable value and we add 10% BCD. Then we calculate 10% SWS on that BCD amount. That gives us a new subtotal that we use for the IGST. Finally, we calculate 18% IGST on that grand total. Add up all 3 taxes, A, B, and C, and you get a total duty of 324,962 rupees. And that's it. That's how you go from the product's price to the final import tax bill. Before we wrap this all up, there are 2 really specific, really important rules that we actually just saw in that last example. You need to know these because they can make a huge difference in your final calculation. First, the special rule for air freight. When you're importing by air, customs has a rule that caps the amount of freight cost you can include at 20% of the FOB value. So let's say your actual shipping was way more than that. It doesn't matter. For tax purposes, it gets capped at that 20% mark. That's exactly why, in our example, we used 173,200. It was exactly 20% of the FOB. And the second big rule is for insurance. What if you don't know the exact insurance cost when you're filing your paperwork? Well, customs has a default for that. They will automatically calculate the insurance cost for you as 1.125% of the FOB value, and they'll just add that in. This is another key detail to remember, and we saw it in action in our big calculation. So let's recap our entire tax recipe one last time. You start with the FOB value. You add your adjusted costs for freight and insurance, and that gets you to your foundational assessable value. Then you layer on the taxes in order. First, BCD on the assessable value. Second, SWS on the BCD amount. And finally, IGST on the grand total of everything that came before it. And there you have it, the recipe for calculating import duty. It might seem a little intimidating at first, but as you've seen, it follows a really clear, really logical order. Which, brings us to a much bigger question. Now that you know the formula, how does this whole intricate system of rules and rates and surcharges really shape the prices we all pay, and maybe even the global economy we live in? It's definitely something to think about. Thanks so much for joining me for this explainer.